Hey guys, welcome back to another video from the Maestro Speaks. Hope everybody's doing fantastic out there. I just wanted to highlight this particular currency pair. This is the Swiss franc Japanese yen currency pair, CHFJPY, right? Now, of course, I'm analyzing the market from the higher time frame, right? This would be the weekly. This would be the weekly time frame. And I want you to take note of something. This market has been bearish for 3 consecutive weeks. And in other videos prior to this one, I spoke about support and resistance and how it's such a powerful concept. Because the market essentially is only going from a level of support to a level of resistance, and from a level of support, resistance back to support. You can see that this market is falling, right? Now watch this. Right here, right here is a level, right? Right, the same area right here. If we like to look to the left, the historical price movement. You have multiple touches, 1, 2, 3. Of course, this is like a zone. It's like a zone, you know what I'm saying? But you got 1, 2, 3, 4, 5, 6, 7, 8, where the market failed to break through. And then finally breaks through, goes up, hits this area, comes back down. This was a level as well. But of course, the market broke that level. And remember I told you in previous videos, when you see a market breaks a particular level, you could expect some type of continuation. You see what I'm saying? And that's what the market did. Broke, up, comes back, touches the same exact level. See? The level. See? Level. Then you got a break. But then it closes back. And it closes bullish back within, above that level. Now then the market went up. And because the market, like I told you, I'm telling you guys, if you understand this, look, see, level of past support, future resistance, see, it formed a doji, and we're talking weekly now. Could you imagine you got a weekly doji at an area of resistance, historical resistance? What did the market do? Of course, the buyer say, we ain't checking for this no more. We ain't know what the market gonna do, so we can take our profits. And look what the sellers came in, short the market down. Now, right here, this is an interesting area here, right? I perceive this market will continue to the same level here, possibly the same level. Right, the same level, possibly, because see, it broke. See, you see this level? It broke this support level, right? Historical support level. It broke that level and it closed underneath that level. So I perceive that the market will come right here. So persons who want to get in this trade, right? Now, of course, you are late to the party. This is why when you see this type of move, right? Now, of course, we're approaching this area, so you got to be very careful. So, y'all, you might have to scale down to, of course, the lower time frames for entry. You see what I'm saying? You see what the market is doing? You see what the market did right here? So, watch this now. If this market closes bearish, right? If you have a candle closure as bearish, then you could get in for continuation right there, more than likely. You see what I'm saying? And then on top of that, you are underneath. This is seller's territory, because now you're underneath the 200 simple moving average and also the 20 simple moving average. So that's confirmation as well. As a matter of fact, if you had got, trust me guys, listen, the market is only going from resistance to support and support to resistance. So now with this particular trade, if you had gotten in, of course, you will have to have your money management on lock to know how much you're willing to risk, how much you're willing to lose, that kind of thing. All right, but I'm just saying that this market, I expect to continue right to this area here for sure. No, there's no guarantee, of course. Hold on, let me see something. Let me zoom out. I'm going to zoom out. Right. See? Right there. Even more so. Right there. Bang. You see this? So watch this now. If this market closes bearish, right? I would enter this trade, put in my stop loss above the previous high, and I'll ride the market all the way down there. So let's do the math, guys. Hold on, let me go. I can do the math with you, right? Let me enlarge the screen some more. All right. Now, let me do a little bit more. Seeing that we established this is a support level here, right? This is a support level, and more than likely the market can come all the way down here. More than likely, because I'm looking at things from the higher time frame, and I can see certain things from the higher time frame. All right. So watch this. Hold on, because I got to show you. So if this market closes, let's say this market closes, I don't know, here or something, and you get in, right? Your stop loss would be up here, above this candle here. See? So you would be risking 126 pips, right? Your risk would be 126 pips, right? But your reward would be 214 pips. Now that's a 1 to 2 risk. That's the 1 to 2 risk. Now I prefer trading 1 to 3s, right? Now this is where entry is important. So now if you enter this market, right? You enter this market. Let's say you enter this down here. You might want to put your stop loss maybe slightly above this, because this right here, see, this right here is a level of support. So let's just say the market closed here then. See, this is where now the math will have to kick in for you. You know what I'm saying? It's all about your risk tolerance and your risk to reward ratio plan. So now if you enter the market, let's say the market closed here, right? Let's say close here. You enter and you put your stop loss here. You got 69 pips as it relates to stop loss, or let's say 70 pips. 70 pips. But then you have a 206 pip potential gain, right? So you're looking at a risk to reward roughly of a 1 to 3. That would be considered a good trade in my humble opinion. You see, you got this area of support, so you could take that risk rather than putting your stop loss way above here. You got this area of support there, so you could probably put your stop loss above that support right here, because you're trying to minimize drawdown. Now, of course, with your risk to reward ratio, right, you would have to lose. Let's say you're taking 10 trades with the same mathematical plan, right? Or you have to lose. You lose 7 trades and you win 3. You're still profitable. You see what I'm saying? Once you have your risk to reward like that, but you gotta have a trade plan. I don't know what your trade plan is, but all I know that this particular potential setup is on the horizon, where I see the market actually falling all the way down there. Potentially. potentially, because you got plenty bearish pressure here. Plenty bearish pressure on the weekly. Plenty. You see what I'm saying? Plenty. Look what the market did previous. You got a level of past level of support, became future resistance. Look what the market did. Look where how the market closed on the weekly. You see where I'm coming from? So if you're trading even off of the weekly, and you say, you know what, I'm entering, and this is how you trade. You got this whole situation here. All is down here. The market went all the way down here. All the way down here. You know what it is to risk this? You're risking this to get all of this. But you gotta understand support and resistance. That's all the market is doing, guys. Once you understand that, this is when trading becomes easy. So, in my humble opinion, because see, this is like a trend continuation thing to get here. But if you're really looking at it from the higher time frame, you could have get in from here and ride the market potentially all the way down here. Only risking right up here, 169 pips. This is off the weekly now. 169 pips. You're risking that. Your reward would have been 597, potentially 597 pips. So you have a risk to reward. Most definitely more than a 1 to 3. That's like a 1 to 4, I think. That'll be like a 1 to, let me see something. That would be a 1 to, like a 1 to 4 risk. Let me see. Wait, no, that's like a 1 to 3, sorry. Yeah, that's a 1 to 3. Good trade setup right there. Good trade setup. That's like a 1 to 3. Can't go wrong, man. But it's according to how you trade, which time frame you trade off of, and you're marking up your support and resistance levels based off of the time frame that you're trading off of. And of course, with the higher time frames, you of course your pip count is going to be greater. Stop loss going to be greater as relates to pip count. Take profit is going to be greater in terms of pip count. So now you have to be wise and be like, okay, I will lower my lot size. Just now where you would have to lower your lot size to accommodate the move. Because you don't want to have a lot. Let's say you can't trade the same in terms of lot size. You can't trade off. Let's say you trade off the hourly time frame. You use a particular lot size for the hour. You can't use that same lot size on the weekly because you gotta accommodate stop losses, stoppage. You have to accommodate. You have to accommodate that. You see what I'm saying? Yeah, man. And then on top of that, you have, believe it or not, a double top scenario. I didn't even mention that. You got the M pattern here off the weekly. See? Swing high. You see that right there? Bang. This right here is the first part of the formation. Market goes back up. Doesn't break above the area of resistance. And it's coming back down here. Guys, you can't make this up, you know. You can't make this up, man. You can't make this up. You can't make this up. This market more than likely coming right here. Based off of historical price movement. Alright? So take care, guys. God bless.